Hey folks, Toby Mathis here, and today we're going to talk about 5 assets that are better than cash. So we all know that the US dollar has been taking a pummeling when you look at historic. So let's actually put some numbers behind it. So how much is $1 from 1980? Let's just say from 1980, how much purchasing power does that $1 have now? Well, according to the US Consumer Price Index, the purchasing power of that $1 is now 25 cents. So 1 USD equals 25 cents. I just want that to sink in for a second. It's lost 75% of its value since 1980. Now let's start comparing it to other assets. And the number one asset that we're going to look at right out the gate is real estate. Using the same gauge, I could say, all right, what's that $1 in real estate worth? Well, $1 US dollar is only worth 25 cents, but $1 in real estate would be worth approximately $4. Now, that's just the real estate appreciation, and that's via the Case-Shiller Home Price Index. But if you were renting it, get this. Your rent's $5, 29 cents, $5.29. So your rent's quintupled. Your value of your properties quadrupled versus losing being worth a fourth of the value of a US dollar. So that's number one. Now I know what you guys are all thinking. There's a bunch of you guys out there like, but gold is where it's at. Gold is what you call a hedge against inflation. I'm going to say gold and precious metals. So I'll just put this over here. I'll just say, hey, we won't just leave it to be gold. I know there's a lot of you guys that like commodities and things like that. So I'll just read a Warren Buffett quote for gold. If you own 1 ounce of gold for an eternity, you still own 1 ounce at its end. It will never produce anything. You can fondle it, but it'll not respond. Now, Buffett, I don't like that last part. With gold and silver, you're really betting that someone will pay more at the end over time for that commodity. It does not produce anything. So how about $1 of gold back in 1980? It is now worth $3.66. So it's hedged itself. It certainly beat some inflation, but it's not, again, it's kind of right there with the real estate. I've usually looked at gold and homes in the same vein. They're a hedge against inflation, but they don't produce you anything unless you rent them. Gold, I can't rent. So I've always had a problem a little bit with the precious metals. Hedge, right? That's what it is. It's not an investment, it's a hedge. All right, number 3. This one's an investment, depending on how you get into it. And that is stocks. So this one always kind of blows me up. It blows me away. When we actually start looking at renting out stocks or getting dividends off of stocks is another thing that works. But owning companies tends to do a couple different things. It's one of the best investments you can have. Historically, it's like over 10% return. So that $1 investment, let's just use that, and let's just use the S&P. And we stuck it in there, you'd be right around $55. So 54, 30, 55, depending on how you're looking at it. That would be what it's worth. So it's a huge difference between just regular old real estate and gold, right? So remember that this is rents, that 529. I'm not calculating how much that would have added up, but it'd be a significant amount. So stocks really do get more valuable over time, like in a considerable manner. That's why you want to have them in your portfolio. It's even more interesting when you start reinvesting those dividends. If I reinvested my dividends, and I'm just going to put 54, 30, but if I reinvest my dividends, it would be worth $170. That's the Warren Buffett methodology, right? Buy things that produce. Buy something that creates something. So in a rental property, I have all those rents coming in all those years. In the stock market, I have the dividends. But if I reinvest them, and you're going to say, well, if you're going to reinvest them, Toby, you're going to have to pay tax on it. But here's the interesting part about dividends. They're taxed at your long-term capital gains rates. Hasn't always been the case. But right now, those dividends, for most people, are taxed at zero. So you're able to reinvest. And if you're in an IRA, a 401k, defined benefit plan, cash balance plan, any sort of deferral, you get to keep that money growing and it's not being taxed. So it could absolutely grow over a period of time. It's significant. It's huge. Makes a big difference. That's why I kind of look at these guys. I put a little check by my favorites. It's always going to be real estate and stocks. Number 4, bonds. Again, more conservative, guaranteed. Bonds do well. They're safe, and they tend to, over a period of time, hedge against inflation and grow. So let's just say that I used 3-month bonds over a period of time from 1980 and just kept investing in 3-month bonds every time, just kept doing it. It would be in that $5 range. It would be like my gold and my real estate. Real estate without rental. So if I just bought a home, right? And you're looking at it and saying like, that's the greatest investment you could ever make. It's not. These are hedges, right? So I kind of put gold, bonds, and your home all in that same category. If it's great, it's not producing much, but it is a hedge against inflation, and it's definitely better than that US dollar, which is losing value. It's literally melting. I always think, I live in Vegas, and I think if I took a block of ice and put it out in the sun, middle of the sun, it's just melting away, right? That's just dumb. That's what we're doing with our cash. When we have big cash accounts and we're not making interest on it, no bueno. All right, number 5, last one. And I know that there's a bunch of you guys, you're gonna have something to say about this. It's okay, there's comments. You can leave them in the comments. Crypto. The biggest returns we've had of any asset class, if you call it an asset, is in crypto. Now, I'm not a big believer in crypto being worth a ton, right? You always, I have my Warren Buffett quote on that one. He's always looking at it. And what did he say? Like, you know, if it's a turd and you're trying to get other people to pay you more for a turd, it's still a turd, right? It's pretty funny. But if you had gotten into Bitcoin when it first came out, it was at 9 cents. So if for $1, you could have bought about 12 Bitcoin. Well, that'd be worth, what, $67,000 of Bitcoin today? That would be worth quite a bit of money. That's that Bitcoin. So the dollar actually would be 12 times that. So you'd be significantly higher, whatever that is, 800 and some $1,000. I'll put 800K. If you can read that. I don't know if it's falling off the screen, probably falling off the screen. So I'll just put 800K so you can see it. It just blows everything else away. But the problem with crypto is there's a bunch of crap coins out there that aren't worth anything. So I don't want to sit there and say, yes, get into crypto, but it is better than the US dollar statistically over its short existence. Because remember, Bitcoin's only been around since 2010, and it's had an astronomical ride. So there's a lot of people that have a lot of opinions about those things, but what's clear is that it's outperformed the US dollar. Whether or not we think it's going to continue is for something else. So we all know that the US dollar has stunk it up because it's getting devalued, because we keep printing out more money, and we have this thing, inflation that's taking away the value. So what you want to be investing in is assets. And what's clear is there's 2 categories that stand out. There's one that's an outlier. Crypto, I don't think, like, over time, truth will tell. If you want to put something in there, it's not producing anything, so it doesn't meet my criteria as an asset investor. I want there to be income being produced off it. Maybe Ethereum, if you want to get technical and you could stake it, maybe you could make some interest on it. Maybe you could make that argument to me. But still, clearly there's 2 asset classes that over a long period of time have shown themselves to be significantly better than the US dollar. All 5 of these are better than cash and would be worth your time to consider. So it all depends on your risk tolerance and age as to which one of these 5 categories would work best for you. What are your favorites? Leave them in the comment below. Is there something that I missed? Put it in the comment below. And then more importantly, please like and subscribe. And if you know anybody that could benefit from this information, please share it.